Okay, 1, 2. Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. The day has come, very exciting. We'll talk about rates, the economy, the whole works. We've got the live Jerome Powell speech. We've got the press meeting afterwards. It's about to get very exciting here on the markets. Are you ready? Okay, you should be. And we're going to talk it all through. We're going to go, run a poll for you. What happens if rates come down? What's the chances of rates coming down? All of that we're going to discuss on this show. Are you ready? And then tomorrow, we're going to celebrate with a members-only live stream. Members only tomorrow. You will not see the event posted if you're not a member. That's just the way it is for tomorrow. So we're going to be doing giveaways, free reviews, and all the rest of it. So this is what's happening up today and tomorrow. So if you scroll down here, upcoming live streams, there you go. There's the upcoming live streams. That's Sensei's show on June the 16th, and then we've got the earnings, and we've got the members only video here tomorrow. This is the opening bell tomorrow, members only. It goes live at the usual time, but only members will be able to see this because it's a members-only event. Well, in fact, everyone can see it, but only members will be able to click on it. That makes sense? It's a giveaway tomorrow. I want to celebrate all the good things and support all of my members tomorrow with free reviews and all the rest of it. But right now, we are waiting for Jerome Powell to take the stage. We've got 11 minutes to go before we get the announcement. So let's make some predictions right now, and let's talk about what it actually means, whether it goes up, whether it goes down, what does it mean for you, what does it mean for everybody else, what does it mean for the markets and around the world. So let's talk about it. First of all, we want to welcome in, if you are new here, please tap subscribe and consider liking the video. If you tap the like button, it will share it out to more people. So please do tap the like button and share it out. Let's welcome our guests who are watching us on the Extra channel. This is the Extra channel where we are live 12 hours a day. There's been a couple of breaks in service today because I've been uploading about 20 things at the same time. I've been streaming 2 channels and uploading about 20 videos at the same time. They've all gone out to YouTube and they've all gone out to Rumble. So that's why there's been some break in service today, and I apologize for that. There's only so much I can do as quick as possible. So there you go. Welcome to all of you. At the moment we've got, let's have a quick refresh. Let's see how many, if we can get 100 likes to share this out. We've got a prediction coming up. So we've got 38 watching. You've just tuned in. A lot of people are still, or 44 now. A lot of you are still watching all the premieres that have just come out, and you'll be joining me shortly. So 16 likes. So let's see if we can beat that. All right, tap the like button and let's see if we can get 100 likes during this stream, and then YouTube will share this broadcast out. It's going to be one of our biggest days ever on our channel. We're very, very excited about it. Let's have a little look. 26,121 subscribers. That's really cool. The views are going up. That's all exciting. How many of you are joining so far? Let's see. That's good. Welcome to our Rumble audience. Let me just refresh this. We've got a big Rumble audience today watching as well. I've just given you all the videos. Let me just get past the ads. We've got some money to give away. We've got some pay rise money to give away. Talk to you about that. But let's make our prediction in 3, 2, 1. I have to skip the ad. There we are on Rumble. Here is the poll. Here is the poll. Please vote in the poll. Will the rates come down? The result is, that is the final result now. It's just the poll has just ended. So let me give you the link and you can comment below. That has just ended because it's about to come out. So we've ended it already. But to click on that link in the chat and you can go and leave your thoughts. Hold 72%. All right, let's see how that pans out. And what comments you put on the bottom of there. Let me read the comments. Have we got any comments? Anyone here? Omar, go Omar, Mike, go Green Day. Thank you, Mike. I'm loving it. Go Omar. What did Omar say? There you go. Thank you. That was when Omar came into my channel, and I made him a song. All right, fantastic. That's all of that. Let's come back now. Then right, let's talk about it. We've got 8 minutes to go before we get the result. Now, as you can see, the markets are up a big time today. This is my portfolio, and you can see up and up to 92,648, massive all-time high. Of course, FFI, GameStop, all of the gambling stocks are all going now down to zero. There's nowhere for them to go now. Now rates, we're looking at rate cuts. We'll talk about it in a second. As you can see, FFI and GameStop are all going down the toilet. When everything is going up, these stocks have nowhere to go but to zero. Especially in GameStop, not so much go to zero. People investing in it will lose their money. But Faraday Future will go to zero. There's nothing to stop it, nothing to hold it up, and there's nothing you can do because the big money is all now going to go into the S&P, and there's billions of dollars on the sidelines waiting to come into the markets, and all of this gambling stock will all go to zero. 100% about that. That's how it always happens in history. Right, let's talk about the rates. So right now we're breaking all-time highs. No options here, no contracts, no shorting stocks, and we could hit $100,000 today. We're going to hit 100,000 in 3 months. We might even do it today. So let's talk about it. If rates, I don't think rates are going to come down. For 18 months now, I have said the same thing. Rates will come down in the summer of 2024 because all the numbers were there, but everything is manipulated. Everything is overbought and oversold, falsified information. Bloomberg one says rates down, next day rates go up. CNBC, all of them up, down, one day, and all the rest of it. It's all there to manipulate the market. When you watch it like I do, for 3 years, 12 hours a day, you see all the patterns. It's all rubbish. They're all sponsored. They all earn money promoting this stuff, and of course they want to please everyone. I don't care. I only care about my members. I don't care if the gamblers and the shorters and the manipulators don't like my message. Don't watch. I don't care. I don't do it for subscribers. I do it to build a family with my members. That's it. I'm not sponsored by anyone. I'm not promoted. I'm not paid to say anything about anyone. So I just tell you the truth, and I've said for 18 months rates will come down. Now, they're not going to come down today. I don't believe so. However, they could. And they're going to come down next month or August anyway, because the rates are coming down this summer. Now, Jerome Powell will not want to be left behind. He's already left behind. And because of the Fed leads the world with the economy, and America like to lead the world in most things, they're going to be a little bit egg on their face today. And the reason is America uses lagging indicators, unlike India, unlike Europe, unlike Canada, unlike the UK. They all use a forward new AI technology of looking at inflation. The US does it backwardly looking, and that's a big mistake. And that's why inflation is coming down faster than the Fed really knew. They know, they're not stupid. These are very smart people, way smarter than me, of course, and all of us here. But they're using old technology, old ideas, and they're really out of date when it comes to inflation, okay? So Europe has dropped prices, rates, this European bank. Inflation dropped like a stone today in Asia, in India, in the UK, and Canada. They're all reducing rates. So we are going to get rate cuts. Now, what I think is going to happen is we're not going to get a rate cut today, but we will in July or August. I've said it for 18 months. Nothing has changed because America will want to make a big statement. They won't want to be left behind. So what I think will happen is we'll get a much bigger rate cut in July or August. That's what I think will happen to lead the world once again. That's what I think will happen. We're going to get 2 rate cuts this year, and we could get 0.5% and then 1/4. I do think that's what's going to happen. We might get a rate cut today. Now, I don't know. Obviously, I can't read the future, but I think we'll get a rate cut, a bigger one next meeting. Now, we don't have to wait for the meetings. Now, what does this mean for you? What it means is for good quality stocks, they don't care if the rates go down. So it doesn't matter. What's important is inflation is going down, not the rates. The rates do not affect Amazon. They do not affect Apple. They don't care. They make money from the rates being high. Rates going down for them isn't really that much of a big deal. They don't really care. They probably prefer the rates stay where they are. The rich get richer, the poor get poorer. We've got 3 minutes to go. You won't miss anything. I'll tell you all about it as it happens. So they don't care. So the great businesses that I own through the S&P don't care. They love it. Now, what about the small caps? The companies that make money, Virgin Galactic, for example, they will like it because they've got a real business, and this will help their customers fly. This will help them reduce their rates for what they pay for their loans. They will like it. However, what about things like GameStop and FFE? No, they'll all go down the toilet because they have no value in the first place, and now the gambling days are over. People will leave these stocks and jump into the mainstream markets. There is billions of dollars on the sidelines waiting to come in. It'll go into growth stocks, and you can already see it. Because J&J, which is worth $200, has gone down again today because money is being put, and look at Coca-Cola. Look at Coca-Cola. These are the best businesses. They are defensive stocks. They don't do well in growth periods. We've now got growth. Enphase Energy, flying. Tesla, look at it's up today. Still too expensive. Don't expect it to carry on. Look at Google, Microsoft, McDonald's, Microsoft, Nvidia, all doing well, okay? So the money is going to come out of defensive stocks and go into growth stocks. Virgin Galactic is a growth stock. FFI is a dump, broken business. So just bear that in mind. That's where the money will go. That's how it will all pan out. Get ready. We're about to bring you the rates. I don't think a rate cut is coming today, but it will come in the summer. That's all we care about. What we do care about mainly is what we saw today with inflation. Inflation is coming down. America is behind realizing it. We already knew it. I already knew it. I was already in, and I'm in with margin $28,000. So I am perfectly happy. Now, we've got 1 minute to go. 1 minute. And then the most important part is not the rate. It is what Jerome Powell says at the speech. So I am going to give all of you now a couple of things. Very, very exciting. We've got literally 1 minute to do it. So here we go. If you are in the United States of America and you click on this, Robinhood today released a brand new gold benefit. You cannot afford to miss it. Get gold on Robinhood, and and you can get a $2,000 credit card. You're going to get loads of benefits by having the gold card. Plus, if I get just one more person sign up for gold, when I get my gold card, I'm going to melt it down, get the gold, and share it out amongst the people that help me use a referral. There it is in the chat. If you're in the US and you don't want gold, which I don't know why, here is the free stocks. Make sure that you get your free stocks. And if you are in the UK, here is your free stocks. I have Robinhood UK. Here is the rate. We have got 10 seconds to go. And here we go. Let's have a look.
Any kind of stability in the bond market? At what point does it become disruptive? Right now, we're still seeing that massive rally on the heels of a really positive CPI print.
With your Fed decision, here's Mike McKee.
2 dots, no rate move. The median
there you go.
19 Fed officials
told you, no rate move.
Rate cuts this year moves to 2 from 3 in March.
There you go.
Policymakers are quite divided, however. 8 members see just 2 cuts this year. 7 see only 1. 4 vote no change.
There you
they
go.
Now have 4 penciled in for 2025.
America is behind the figures.
The range is so wide, it's almost meaningless. The neutral rate also moves up. The median now 2.8 2.8% from 2.6%, although they don't get there until after
That's what I said.
2026. 9 members see neutral as 3% or higher.
Doesn't matter.
One as high as 3.75%.
Good news for big businesses.
The Fed's target range stays in the range of 5.25% to 5.5%.
I said cut in the summer, yes. Next month in
GDP
August.
Projection for
Yes.
2024. 2%
Listen to what
for
I'm
next
saying.
year. No change in the 4% unemployment forecast for this year, though 2026 moves up a tick from March to 4.2%. It's PCE inflation where we
Good
see
news.
the biggest change
Exactly
in
what we
the
want.
forecasts. Headline of 2.6 this year, up from 2.4% in the March projections. Next year, 2.3 from 2.2. Core PCE is forecasted 2.8% this year, up from 2.6%. Next year, also 2.3 from 2.2. Inflation was the only significant change in the statement following today's better than expected CPI.
Correct.
The statement now says, in recent months, there has been modest further progress toward the committee's 2% inflation target. The decision was unanimous.
Mike McKee, thank you, sir. If you were looking for fireworks in financial markets, you missed it all. It happened about 6 hours ago.
Yep,
at 8:30
absolutely
Eastern
right.
Time.
So let's repeat what I just said. I said the rates would not come down today. I've said for 18 months, rates will come down in the summer, not today. July and August, you will see the rates come down. This is great news today. Great news if you are in the great businesses. If you're in Apple, Amazon, the S&P, they don't care. Inflation's coming down. That's great for them. They make more money. The S&P makes more money. A $624 price target on the S&P within 12 months. The markets didn't pump today because of a rate cut. They pumped today because we know where the economy is going. Fantastic. However, this is great news for investors, but I repeat again, bad news for gamblers, because what this will do now, the stocks that are borrowing money, these businesses have now got another nail in their coffin, because people will come out of the gambling stocks, they'll start buying in. There is billions of dollars on the sidelines waiting to buy the great businesses. So GameStop, rubbish, going nowhere. Faraday Future, all of these stocks going nowhere now. This makes it even harder for them because rates are staying up even longer. The borrowing companies, the companies with debt, without the cash, this is no good for them at all. None at all. It's not good for Virgin Galactic either, but inflation coming down is good for them, and we've got the rate cuts around the corner. There's no doubt about it. America, like I just said, doesn't want to lose face. Jerome Powell does not want to lose face and lower rates today, looking like he's following the UK, Canada, India, Europe. He doesn't want to do that. What he will do is he'll do something bigger on the next rate cut, when the next cut will come. And it will be this summer, 100%. I've said it for 18 months. Now what we have to do is wait for 20 minutes before Jerome Powell takes the stage. This is when we get the actual mood of the day. This is when we get the press ask questions. This is when we get the movement. So this is fantastic. I am very, very happy. It's great today for investors. It's absolutely awful if you are gambling in stocks with no value whatsoever. Let me read the comments and make sure everyone understands what's going on. Increased my NVIDIA position yesterday morning, now holding 140 shares. Congratulations. There's plenty of growth in NVIDIA, but I think you'd be better owning the S&P. Oh my Gandhi, says Nee Grower. Martin, and you are you on the phone with Jerome Powell getting this some insight? Absolutely right. Martin is pulling the strings. Jerome is his puppet. Yeah, that would be good. Rates will come down. No, the rates will not come down. Oh, hang on a minute. Continued recording. What's going on here? Have we got a technical issue? Let me see if I can fix it. Have we got a technical issue? Speed that up. Yes, that has stopped. Finish. End. Resume. Okay. Go live. Stay with me. Click to resume. Stay. With me. There we go. Still good. Okay, there we go. We're back. Yep. We managed to get it back. We're all good. Is gone. I'm here. Yeah, we had a break there in service, but I have a backup system that kicks in. So that's what I did. I'm here. It's got Moon Shadow. Okay, so let me carry on. Let me carry on reading the comments. Let's have a look. Let's have a look. Let's have a look. Let's have a look. Come back over here. Let's have a look here. Let me read the comments. Maybe show Fed Watch Tool and tell us more of your opinion differs. Let's have a look. Antonio De La Cruz, cut in September. Yes, if not before. Has the show started? Yes, I'm here. You said cut in the summer. Yes, I did. Absolutely. Hi, Mike. Hope your afternoon is good. Powell's tie color will foreshadow his speechless sentiment. No, it won't. Russian authorities are listing Ukrainian abduction. What is all that about? I don't know what that's got to do with anything. Martin, are you on the phone with your own pal? I need to concentrate later, everyone. I need to concentrate. Flipping heck. Same. Antonio De La Cruz. Martin is pulling the strings. No cut today. When is the event? In 20 minutes time. You will not miss it. When is the event? In 20 minutes. Please cut the interest rates. No, you don't want interest rates to come down before needed. We don't want that at all. Got to wait. Have patience. I'm in the EU. The European Union has already reduced rates, so you have that there. All right, cool. Rates will come down. Not today, they won't. Should it not start? No, it starts in 20 minutes. Stay with me. I'm back. This would be of best service to your viewers to understand what you think isn't priced in. Showing Fed Watch Tool and comment. Showing Fed Watch Tool. Well, I don't like to. I like to present my show the way I like to present it. If you don't agree with me and you want to present it differently, then please feel free to start your own YouTube channel. But I like presenting it the way I present it. If you don't like it, I would suggest you set your own channel up. All good, Rob C. There you go. Did you see the 1% boost on Robinhood Gold went live today? Mark Saxby, are you kidding me? I've made about 9 videos on it. 9 videos on it. Are you having a laugh? I've been talking about it all day, Mark. I've put out videos, about 8 or 9 videos on YouTube and on Rumble. We've been giving everyone in the link, the top, get your solid gold credit card. One more person to be verified and I will get a solid gold card. One person has cancelled their gold membership. So I need one more person and I will share my money that I get with you. So if you are looking to go gold today, 1% match on all the money you put in. Here is the gold link to get Robinhood Gold. If you do, not only do you get 3% back on cash back, 1% match now on all your money, 3% on your Roth. Everything just goes on and on and on. There is the gold card. I will also. Not only can you now use my referral to your referral to get a gold card for yourself, if I get one and I only want one more person because one person dropped out, I will share what I get with you all as long as you prove to me you've done it. And 2 of you this morning did it. General chit chat. Look at this. 2 of you this morning are on my radar. Look, we have Rallo1 signed up on my gold list. Zed Hink, worth 100 gold, and you want me to share part of my $2,000 I'm going to get with you. Make sure that you get the gold card. Time is running out. I might only need one more, and then it's all over. No rate cut this year. No, that's completely wrong. Bearish if Powell confirms in speech. Negrower, that's incorrect. That's not the case at all. There's nothing to suggest that at all. Okay, we'll open up my own channel. Good luck with that. Off you go then. I think it's beating around the bush to say summer when it's already concerned. Mr. B Canal, you're talking rubbish. I have been saying for 18 months the rates are coming down. So I'm going to get rid of you. I'm going to hide you because you're talking rubbish. Our channel is about the truth. For 18 months, I have said the rates are coming down in the summer of 24. For 18 months. How much more bloody advanced information do you need? He said, by saying the summer, that just covers, everyone's saying that now. I've been saying it for 18 months, so bugger off. I'm going to time you out. Put user in timeout. There you go. We don't need people talking rubbish, so you can bugger off, go and do your own channel. What do you think about the payment being paid? It's great. They got to do that. You're still going to get the 1%. They're just paying over 12 months, 2 years. What's wrong with that? I've got no problem with that. Think about it, Mark. If they didn't do that, you'd have clowns like Mr. B Canal who talk rubbish. He would put money in. He would take the money out. And Robinhood would go bankrupt. Everybody would lose. The system can't work like that. You have to put money in to be able to get it out. And if people put money in now, which they're going to, what's going to happen if everyone tomorrow takes it out after their 1%? Robinhood would go bankrupt. The system would break. So it's a great idea. I've got no problem with that at all. No problem with that at all. Because remember, I'm already earning 5.25% on the uninvested cash. Now I'm getting an extra 1%. As long as I leave the money in Robinhood, well, I'm getting 5.25% anyway. I'm now getting 6.25%. Why would I not want to do that? It's bloody obvious, isn't it? It's a brilliant idea. Francesco Santos. Let's scroll on down. Negrower. Rubbish. Yes, it is rubbish. We ignore reality and live in our own bubble with made-up truth. Negrower. What the hell are you talking about? Okay. Love and respect you. Nasha. Thank you, Nasha Sadat. Love to have you here. But you damaged me about FSR. What do you mean I damaged you? You bought FSR. I didn't. It's at 99% going bankrupt. We've been saying that consistently. There's loads of opportunity to scalp trade it, but 99% it's going bankrupt. So how did I damage you by saying that? I mean, we've been saying that. Sell your stocks when the rates come down. You just stay in and benefit from a growing economy. Hey, Danny, says Mike. All right. Okay. Now then, we've got 15 minutes to go before Jerome Powell takes the stage. This is when it gets interesting. Let's have a quick listen in.
Gyrating around what level of 10-year yield do you need to really signal?
Jobs, we continue to generate paychecks. And if the last month's report is to be believed, and we have to be careful on that we actually saw an acceleration in wages, that's something to sort of, I think, take with a grain of salt. But at the end of the day, this is an economy that for the moment is still hanging in there, although slowing from what was a stunning pace in 2023.
Markets are going up again.
Here. I'm just going through all the different statements, and this is a mess. I mean, in terms of
it's not
all the
a mess.
Different views. This is not a consensus that you could see that was easily reached. Maybe there it is for right now, but later in this year, what the balance of risks here
it's
really
manipulation,
is
as it always is.
When it comes to the different Fed officials. Do you think that there is too much hawkish talk right now and too much hawkish projections at a time when it seems like the Fed is saying we still haven't done enough, we want to get to 2% a little bit sooner, even as we acknowledge this is going to be a battle?
Yeah, I think if you were to take the SEP and the statement fully on face value, this would be an overly hawkish policy stand for this economy. Among the other things, the fact that we are now at one cut means that given that the Fed will not want the stop, go cycle, that means that cut comes late in the year, very late in the year. And I agree with Diane, it does matter when you start. the cutting cycle. It really does matter. It matters for small businesses, it matters for low-income households, and it matters for the economy. So if you were to take this at face value, then the market would be selling off right now. But it's not for good reason, and that's what I said earlier, and Bob mentioned it as well, is I don't think this fully reflects the latest set of data.
No,
and given
it doesn't.
That this
Data
is
all
data
backward thinking.
Dependent Fed, if the data had happened yesterday or the day before, the S&P would look very different than it is today. And that's why the press conference is going to be so critical.
Yep.
And that's why Chair Powell cannot do what Bob wanted him to do half an hour ago, because he's really going to have to explain things now.
So, Mohammed, based on the guidance we've got in our hands at the moment, it sounds like December. Are you telling me by the time this news conference finishes, it'll sound like September?
The summer,
suspect so,
I've said
John.
it over and over again.
Don't you?
Yeah,
These people just want to keep your views, want to appease everyone. There's so much manipulation in this stuff. It's unbelievable. I used to watch this stuff all the time when I started investing. And I always remember when one of the senior investors for Chevron Oil said we should all buy Chevron Oil. It was the bloody worst information I was ever given. Bloomberg, CNBC, they want you to watch their TV. They don't want to upset anyone. I don't care. I will tell you how it is. I only care for my members who enjoy my information. That's it. I don't care if you subscribe to me or not. I don't care if you watch or not. I am investing correctly. That's right for me. And I'm not gambling. I'm investing and I want the facts. I don't want the bullshit and the opinions and the ideas. I want the facts. And the facts are we're doing okay and the rates are coming down this summer. These people, 1 minute they say the rates are coming down, then they say it's not. Before the meeting it's one way, then it's another way. They're just trying to keep everybody happy and keep all the viewers watching. It's bloody ridiculous. Make your bloody mind up, read the numbers and make an educated best guess. That's all you can do. But stop flip-flopping all over the place to suit everybody. A couple of days ago, we had Meet Kevin and Graham Stepan, doom and gloom, boom and fire and brimstone, the world's coming to an end. I bet you tomorrow they'll go, oh, everything's great again now, because they want to keep those millions of subscribers. I don't care. All right? So there you go. I want to do the right thing, not the popular thing. Good man, thanks. How are you doing? Buying more. Nasha to that. You need to take accountability for your actions. I'm the biggest fiscal investor here. Yes, way bigger than you. I agree. MSK's all in. And he's not having a go at me going, Martyn, it's your fault that I bought Fisker and it's your fault. Bloody right. Yeah, bloody right it is. Of course it is. Yeah, I'm not blaming anyone. Either way, let's hope fortunes change. I wish you all the best. But if you are gambling and if you're buying Fisker, as MSK knows, it is a big gamble. 99% going bust. Of course, you can make money trading it before that happens, and it might not happen. Anything can happen. But the chances are it's 99% likely to go bankrupt. So if you buy that, you are taking a risk. That's the way it works. History doesn't repeat itself, but it rhymes. Exactly, MSK. Let's take credit when your predictions come true, but shift blame to others when you're wrong. Negrower, what are you talking about? You're not even I don't even know what you're talking about, Negrower. Why are you saying all these things? Anyway, preach, MSK. Right, 10 minutes ago, markets are going up again, all-time highs again, 92,721. We could easily get to $10,000 today. I don't think so. If you remember this morning, I said 80% chance. We're not going to do that, but it's completely possible. We will definitely be at 100,000 within the next couple of months, no doubt about it. 100% certain of that. Down over 10% today. I'm very sorry. What are you buying today? That's over 10%. The only way you could be down 10% today is if you bought junk stocks with no value, huge amounts of debt, Faraday Future, things like this, GameStop, all of this stuff, which is all rubbish. All of this is going to zero. Today is a nail in the coffin for GameStop, a nail in the coffin for Faraday. It's not good news initially for Virgin Galactic, but they've got a business and we know rates will come down. They just have to hold on a bit longer, but they can. They've got enough money for another year or so anyway, so there's no issue there. But for Faraday Future, I don't know how it's not zero already. Never bet against the Feds. Never bet against the Feds. That's a good assumption. Anyway, good businesses are doing well. The rich get richer, the poor get poorer. The same scenario. You've just got to live like a rich person, and simple, really. Anyway, my price target for Apple is nearly there. 225, I think I said, didn't I? Was my top target for Apple. Can't see it going much more. A lot of overbuying going on here, but it has had a very slow run recently. We did drop off, you can see here, so it's now catching up the way it should normally trades and normally grows, but it's still expensive, but it's good to own it through the S&P, and I'm happy to do that. You own it, you don't trade it. Next year, energy, Enphase. So we've got 8 minutes to go. That's when it gets interesting. The best buy today is without doubt defensives, Coca-Cola, J&J. These are the best ones. Pfizer as well. Good. Oil, no good. Tesla, too expensive. It's only gone back to where it was. It's only worth 110. It's back to where it was. This shows you that people think that the rates are coming down because Tesla's going up, because they know that the rates are going to come down in the summer, and we are the summer until September, by the way. If anyone wants to go, you keep saying the summer. I've been saying the summer for 18 months, not for 5 minutes. For 18 months of 2004, I said the rates would come down in the summer of 2024. Let's have a look. FFIE is cool. What's cool about losing money on a bankrupt business? I don't know. I wish you the very best. The car's quite good, but the company don't want to sell them. They've even said that on the earnings calls. If you listen to the earnings calls, as I always do, the CEO said, we're not trying to sell cars, we're trying to build a brand. However, you might not want to listen to the man who runs the company, who's told you what that they're not trying to sell cars, and whatever. But they were being evicted from their premises recently. They've got no money, they've got no sales, they're not doing anything. I don't know why anyone keeps saying to the contrary. You've only got to look at the balance sheet, and there's no business here whatsoever. FFIE, 0. Yeah, but there's no value. It's not a matter of opinion. It's not because I'm in a cult following. I'm not with Omar or Roaring Kitty. Roaring Kitty's a bloody lunatic. You know, you're not following those sort of people. I mean, why would you follow those people? Why don't you just read the balance sheet? The business is not worth anything. Anyway, good luck to you if you're gambling on rubbish. I wish you the best, sort of. I don't really wish you much of the best, because if you're going to be daft and you're going to ignore all the basic principles, then if you lose all your money, you did it to yourself. I mean, you know, if you go into a casino and put all your money on red, it's pretty stupid, isn't it? And if you lose it all, do I feel sorry for you? No, not really, because you knew what you were doing. I mean, you asked to lose your money. You know, 50% chance you lose your money. So I don't ever lose money. I don't think that's a very smart idea. Anyway, 5 minutes ago, before we hear Jerome Powell speak, that's when it gets interesting. And when he starts to speak, I won't be speaking anymore. I'll be listening in. So we've got 5.5 minutes to go. Best value today, J&J, Pfizer, Coca-Cola. Any of the defensives today is the way to go. No doubt about it. Martyn Lucas, I think knee grower is as in his knees are growing. When you say knee grow, it sounds a bit dodgy. Grower. Knee grower. I think it's knee grower. What am I saying? As in his knees are... Okay, knee grower. When you say knee grow... Oh! Do I say that? I thought knee grower. Okay, I thought I was saying knee grower. Okay. I am saying knee grower. You're just joining them together. I see what you're doing now. Anyway. Bloody hell. Right. Okay. Let's get excited. 4 minutes to go. Jay Long. If you've just tuned in, click subscribe, ring the bell. Lovely to have you here. Tap the like button. It's lovely to have you here as well. Fantastic. Yang Pablo cancelled. What's cancelled? YNG Pablo cancelled. What does that mean? One word, cancelled. What's cancelled? You're cancelled? No, we're still here. I don't see anyone cancelled. What do you mean, cancelled? What does that mean, cancelled? No idea what that means. Cancelled. Anyway. Oh, that's ended now, isn't it? Yeah, go live, end stream. We got 3 minutes to go. We'll be watching it live. I don't think we've got any broadcast today on. Yeah, no, that's finished now. Go live, end live stream. Yeah, there you go. Rumble fell over today. Let me check. This is good. Yeah, all good there. All good there. All right, okay, good stuff. We had a nice platform here. Let's give good input, if anything. We have a nice platform here. Let's give good input, if anything. Yes, we do our best. You like GME. I like GameStop. No, it's rubbish. It's a rubbish stock. It's got no value whatsoever. The head office is just down the road from me. I tried to get Mr. Cohen on the show. They declined because I'll ask all the hard questions. They want to be asked. They want to be asked questions that they have good answers to. Their earnings was worse a couple of days ago. They didn't do a presentation. Everything about it is rubbish. I mean, there's a million stocks better, put it that way. So why would you even bother? Anyway, get to the carpet. Martyn Lucas, if in doubt, just call knee or kneel down. What is it with you messing around with me here? Knee grower. What is on you? All in good sports. Yes, in good sport. Hi, sir. Hope you're doing well. How would you do Canadian? Yes, I do. I do Canadian review stocks. Absolutely, I do. If you are a member of the channel, I do it. And tomorrow is a members only day, and we're doing a members review day tomorrow. It's a special event tomorrow. Only members tomorrow. All right, here we go. We're waiting for Jerome Powell to take the stage. So let's get ready. Here we go. Okay. I love the way Bloomberg just say whatever they need to say to keep everybody watching their show. It's up, it's down, it's left, it's right. We say this, we say that. I just tell you how it is. And I ain't bothered whether you agree with me. All right. Okay. I'm totally hooked. Thank you. And please continue doing good job. What about Fuel Cell? Thank you. Yes, I do a lot of Fuel Cell. If you become a member of my channel, I'll cover Fuel Cell for you. Right. Here are all the links. Jerome Powell is about to take the floor. I'm about to go shush, and we'll listen in. All right. So here we go. Shout out to all the mods. They're all working hard today. So here are all the links. Here's Alpha Spread. Here is our members only, because tomorrow is a members only day. I'm doing free reviews for all my members tomorrow. Instagram, there is Facebook, there's the X account, there's the all links, there's the extra channel live 12 hours a day. There's Discord if you are a member. It's only available to members. You won't see anything if you're not a member. Anyway, let's get ready to rock and roll. Jerome Powell is about to take the stage.
Report that came out at 8:30
and we're going to listen in.
The forecast
Here we go.
Unveiled 30 minutes ago. I don't think there is another question to ask in this press conference once it starts.
And Michael Gapin put it really well. If the answer is no, we did not, well, it's not that hawkish. If the answer is yes, we did, that is a hawkish tilt at a time where a lot of people view that as progress and even a reason to celebrate success.
The most important thing I heard was from Bob Michel, and it was him talking about parts of America.
A new name for Bob now.
It's a new name.
Yes, audio is coming through. Here we go.
Here's the chairman of the Federal Reserve.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that I think if we, I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher, 12 months rates by the end of the year. If we get, good, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamarosa of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I don't really, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible. But I'd look at so I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly more good inflation readings will help with that. I'm not going to be specific about how many, because really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that. And we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that, so that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think you will see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen.
Hi, Chair Powell. Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, you know, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and you know that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. How can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year, and as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter, and what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. The economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina Smart. Gina Smilik, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. You know, how should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate. And we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had, above trend potential growth and high growth, and yet you've had the benefit of inflation coming down, really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that, though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. That's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So, we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that. But and of course, housing services, you're continuing to see high readings there. to some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully. And we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We you always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month, and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably down 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene.
Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people who are at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth, or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is, anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about, your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as it's spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria. Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So and also the fact that we look at all of the whole situation. So a decision to begin to loosen policy could have several reasons associated with it at a given time. But I would just we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I can think of things many things would make it on that list, but I don't think I'll utter them here.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that, as many good ones as we had bad ones, but no, it's not like that. It's going to be the totality of the data, the labor market data, the growth data. In terms of inflation, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things, because that points to dates, and I just don't think we're not at a point of being able to do that.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the markets should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't, actually it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been, has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, and for our economy, what we're trying to foster is maximum employment and price stability, and we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation.
So we
Thank
are
you, Amy
well aware of
Winehouse.
the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the
About
expansion.
to hit another
We
milestone.
understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there, and we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability now to approach this question carefully, and that's what we're doing.
Just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing. And all the other details, we don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave
another milestone on the way to $1 million. Look at that.
Go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one thing, one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So,
but if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you look at we'll be looking at the aggregate numbers, and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
There we go.
Chairman of the Federal Reserve, Jerome Powell, wrapping up.
All right. There we go. Fantastic. Another great day. Rates, hello, now the markets are moving again. Rates are coming down in the summer, no doubt about it. Economy strong. There it is. We broke another all-time high. These are unprecedented levels. I started with $5,000 and we just hit 93 with no options, no shorts. Brilliant. Absolutely brilliant. And that was great. Everything that we heard there was good. Everything as expected. Amy Winehouse made me laugh when she said, can you give us can you use forward indicators rather than the lagging indicators that the US uses? It was funny because it was the youngest person in the room asking that. And it is a new way of measuring, and they are behind. There's no doubt about it. But, at the end of the day, this benefits a lot of people. High interest rates benefit the big businesses. So if you're buying great businesses, you don't mind. You're more interested in the economy cooling, in inflation cooling, which it is. All of that is happening. So you are very, very pleased about that. And you don't mind that rates stay up for longer. It's not a problem. The rates are coming down. It's like the sunshine. When it rains, the sun comes next. That's what investing is. You are preparing for what comes next. And we know what comes next. So that's why we invest. And one of the things that today made me smile more than anything else, who was it now? Let me just scroll up. It was Shawn Michaels. Shawn Michaels said, he got rid of, where was it? He put up here. He got rid of his GameStop to buy proper businesses. Absolutely fantastic. I don't like you saying because of me, though. Don't please follow me. But, at the end of the day, this is what he said. Shawn Michaels said, "Thank you. I sold GameStop after listening to you." I don't give financial advice. I don't say that for any reason other than it's not there to protect me in any way. It's there to just let you know that you shouldn't follow me. Not to protect me. You can share your views on YouTube, but it's so you know that I'm not your financial advisor. I think it's great, though, that you've dumped a rubbish company, though. I think that's fantastic. Everyone should dump it before it goes to zero. It's a rubbish company. It loses money. Why would you want to own it? I don't know why anyone wants to own something that loses money and their only hope is some clown on YouTube is going to tell them, pump it up by acting like a goat. Acting the goat. I don't quite get that sort of investing. Anyway, The good news is, Sean, you are starting with $20,000. Well, remember, I started with $5,000. So let's remind ourselves, first of all, Sean, what is investing? As an investor, time, patience, discipline is your friend. That is 99% of being a great investor. 99% of it is time, patience, and discipline. If you are a farmer and you plant trees or crops, you plant them in the best fields and you water them and nurture them and you wait for them to grow. That's what investment is. You don't try to time the market, guess when your plants might be producing fruit or whatever, or halfway through the cycle decide to dig up your plants and go, well, let's see what I can get for this half-grown tree. You don't do that, do you? You just wait and take care of your plants and your investments. That's what investing is. It's not a race. You're not trying to beat anybody. What you want to remember is the golden rule of investing. Don't lose money. And the second rule is remember the first rule. Warren Buffett used that all the time. It's very, very important. But Warren Buffett isn't the greatest investor of all time. He's just one of the oldest, and he stayed the course doing the right thing for the longest amount of time. That's all. That's why him and Charlie Munger and Berkshire Hathaway is so successful. They do the right thing longer than anyone. Just staying in the market is the right thing to do. Remember, just because you can trade doesn't mean you should trade. The only winners of trading every time, sometimes you win trading, 95% don't win though, 95% of day traders lose money. So are you the best 5%? Maybe you are. But remember, the only people that win every single time is the brokerage. They earn money out of you in trading. Whereas an investor doesn't need to trade because he's bought his businesses, and all he does, that's what I do, is I work on myself, investing in myself. My biggest investment is me doing this show. I work as hard as I can and as much money as I can. I spend absolutely nothing. I invest absolutely everything. And I want to achieve $1 million live on the show in front of everyone. And that's what I will do within 6 years. You'll see me do it. You'll see me reach 100,000 in the next couple of months. You'll see me do it. So all I do is very, very simple. I want to own the best businesses in the world. Well, I own the S&P 500. If I wasn't doing a YouTube channel, I might not just own the S&P. The reason why I do is because I interview lots of CEOs, lots of people like that, and I want to be the most honest person on YouTube TV to build a family, not the biggest YouTube channel, not the most subscribers, not the most money, the best YouTube channel, the best equipment, the best sound, the best lights, the best information, the best people, the best audience. That's what I'm trying to do. A Rolls Royce of YouTube. That's what I'm trying to produce. So for me, because I want to interview people and I want to be known to be honest and real, I have to only own the S&P. That way I can talk about stocks. People know I'm not pumping it. I can't pump what I don't own. You can't dump what you don't own. I just own the S&P so everyone knows that this is real and honest and so on. So that's me. That's me earning money. Then I take the money I've earned from myself and I invest it. And all I do is this. I'm all invested. There's no point having money in the bank. The bank is a waste of time. There's nothing in my Bank of America. It's about $10. There's about $10 in fact, there's nothing in my Chase account, zero. I closed it. I've only got the Chase Amazon credit card because I use that to buy my Amazon products. But I've got nothing in Chase at all. I've got nothing in the UK at all. And I've got nothing anywhere else other than Bank of America, which is how I get paid from YouTube. And there's $10 in there. That's it. It's all in Robinhood, 100%. And soon I'll have a gold credit card where I'll use the credit card to earn cash back and so on and so forth. So I'm fully invested. There's no point having money sat in the cash. Money is not for spending. Money is for building more money. That's what money was made for. That's why the government, the Fed, print money. Money makes money. So your money has to make money for you. So my money is in here making money from itself. I'm not trying to beat the market, time the market. I don't need to do any of that. What I'm doing is I've studied the great businesses. If I wasn't doing YouTube, I would buy maybe 5 or 6 great businesses. But as it happens, I own the S&P because, like I've just explained, so I could probably make more money, but it doesn't matter. I've got enough. I don't need any more. I've got what I need, so that's fine. I've just got to keep working at it. And then what I do is I don't auto invest the dividends. That's a stupid thing to do. That's a lazy thing to do. Only benefits the brokerage because you're doing it. And every time you do it, they earn money from that. What I do is I take my dividends, and end of this month, I'll have my biggest dividend payment ever, $400. It's my biggest ever dividend payment. And it will go into my cash. In my case, it will pay off some margin, which will earn me 6.25%, or save me 6.25%. And I'm waiting for dips. I'm in margin at the moment with $28,000 because I can only earn so much money every month, but I knew that the markets were going up because we had macro conditions. Donald Trump saying the world's going to come to an end. That was ridiculous. That drove the market down. The court case for him, that wasn't good for the market. We had Iran invading Israel. That wasn't good for the market. All these macro conditions are external of the businesses. They have nothing to do with the businesses. They're just noise. Rah-rah, stupid self-promotion, rah-rah, pointless. The opportunity for markets to dump the stock. Remember, Wall Street are just traders, they're not investors. If they dump the S&P on some news like that, they know everybody else will. That's why it's going down now. People are taking profits. I could take profit, but I don't need to. If I take profit now, I'll pay tax on that profit. I don't pay tax. In fact, I get tax back because I post losses. I'm not going to sell my businesses now. This is daft. What's the point of that? There's no point. So all I do is when the markets go up, as they have been now for the last few months, I'm not doing anything. I'm just working. I own all the stocks, I'm not selling anything, and I'm paying back my margin. When there's a big macro condition, and there has been about 3 over the last 3 months, I use more margin then because I haven't yet earned that money. I haven't got that money yet, so I want to use margin. It's worth it to me, not worth using margin to buy rubbish stocks because then you're gambling on steroids. Don't ever do that. But if you are buying the S&P and you're already up 15, 20, 30, 40, 100%, and there's a dip in the market and you haven't got paid until next month, why not buy some margin? Margin isn't your enemy. It's not your friend either, but it can amplify your gains and your losses. And I've done a whole video on margin. If you type Martyn Lucas Investor Margin into YouTube, you'll find my margin video explaining all about margin. All right, so go and read that. And that's it. Now the markets are going up again. I'm just concentrating on paying down my margin. I don't want to be buying the stocks when they go up. I only buy stocks when they go down. What is the point of buying when they go up? You're reacting to the market rather than being proactive. I play chess while others play checkers. So I've already moved my pieces in anticipation for what you're going to do when these reactions happen. And now the markets are going up, and all I'm going to do now is wait for a bloody great drop. If there's not one, I'll keep paying my margin off, and then I'll start having cash building up, and then I'll just start buying again. And with my cash, no point just leaving it in uninvested cash, earning 5%. I can make a lot more than that just by owning the market. So that's what I'm going to do. Very, very simple. Very, very simple strategy. Now then, MSK did point out something very important. GameStop is not a long-term investment. No, it's not. It's a rubbish, broken business. Doesn't do anything. It loses money. It's not going to go anywhere. Ed Nevius can help you scalp trade. Now, Ed Nevius is fantastic at this. Other channels might offer a training program where they'll charge you for it. We do it for free. It's just a perk of being a member. If you're a member of the channel, you can get access to many, many things that can help you. Many, many things. You get 20 times back what you put in. One of those is you can get free training from Ed Nevius who'll teach you how to scalp trade if you want to do that. All right? Nee Grower said, learn to trade and aim to gain 1% each day. Plausible if you know risk management and day trading strategies. It's possible, but 95% of day traders do lose money. So don't assume that, you can and it's easy and all the rest of it. I have found it's easier and you'll make more money just by buying great businesses and holding them. Leave the plants in the ground, let them grow, and just concentrate on yourself. Don't use the stock market as a casino. Own the casino. Don't play it. Very, very simple strategy. This has been such a great day. Booming, Jason Davis. Congratulations to you. Thanks for covering mine. You're very, very welcome. Maintaining 2 portfolios and use the profits from scalping day trading to buy stocks for the long-term portfolio. It's not bad. Not a bad idea. It's not a bad idea. Nothing wrong with day trading, scalp trading. People make a lot of money. They also lose a lot of money. It is very risky because you can't time the market. You absolutely cannot time the market. All you're doing is using charts, and Sensei is very accurate on this. You're using charts to suggest what is going to happen because it happened in the past. It's not a guarantee it's going to happen in the future or happen again, but it's just more likely. That's all. I prefer guarantees. I don't think you should disrespect money. I don't lose money. I never lose money. Not since I rebalanced my portfolio and became media a couple of years ago. I lost money all the time. Now I don't lose money. I'm the guy who picks up the penny on the floor and says, I'm going to double that to penny in 7 years. And that's exactly what you do. So there you go. You're a smart old mate. Thank you, Mike. You're a good friend. I appreciate it. 100% Mike. Thank you, guys. Jay Long, giving it away. Let's have a look here. Martin, can you check my IP? Yes, I know I can see anyone's. I'm not going to reveal how I do that. I'm not going to show it so you can circumvent my security and technology, but and share my live location with everyone. I am not going to get into that. I'm not going to get into that. I know what I know, and I am not going to get dragged into that. Congratulations, Martin. Thank you very much indeed. We hit 93,000 a few moments ago. Nice one, Martin. Disprove these haters with negative Nick Nancy's. Nick Nancy's. That's funny. That reminds me of the Gangs of New York. Nick Nancy's. That was funny. I like that. It's a funny old saying, that is. Shawn Michaels, once he starts throwing super chats around like that, it does sound like ramen. Oh, we got a bit of fun going on here. Reads the comments here. I'm just trying to... let's go down. No, knee grower, I'm not going to start doing anything like that. I do what I do for myself and the protection of this channel. I'm not going to do security checks for your entertainment. I'm sorry, that's not a service I provide here. I'm not going to entertain that. Sorry about that. Vaz, 93,000. Yes, thank you. I can't do it. No, you're right. I ain't got a clue. I ain't got a clue what I'm doing. What you guys think of VHAI? I don't know. I've never researched it. You really only started with 5,000. Yes. And I want to be clear. So I'm at 92. We were at 93,000 a couple of moments ago. Let me be absolutely clear, because a lot of people go, oh, he's just earning all this money on YouTube. Oh, it's all YouTube. He just buys his own portfolio. No, I don't. I've been doing this for 3 years in about 2 weeks' time. For the first year and a half, and Mike, MSK, they'll all tell you, because they've got their 1 and 2 year badges, they'll tell you, I sat here all day, every day, and earned zero. For a year and a half, I earned zero. Zero. I worked 12 hours a day, all day long, every day. Zero. I wasn't monetized, and then when I got monetized, the next 6 months, I was lucky to make $1 a day. You all saw me do it. I would share the statistics on the analytics on YouTube, and you'd see it. And I'm just sitting here every single day earning bugger all, or earning $1 like 2 years later. A year later, now I earn a bit more on YouTube, and every penny goes in. But it's compound interest, it's staying in the game, it's investing everything. And I don't have any outside sources. No one gives me money. There's no magic money falling out of the sky. My only income is YouTube, about 10 cents, 50 cents a day, maybe $1 a day, not even $1 a day at the moment, on Rumble. I earn about $20 a month on Discord. That's it, right? So that's it. And all I'm doing is just spending nothing. How can I spend any money? I've got no mortgage. I've got no car loan. I don't own a car. And I sit all day talking to you. I don't eat that much. I don't smoke. I don't drink, other than my birthday and New Year and the anniversary of the show. I have a couple of beers here. And that's it. These are the same shirts and jackets I had 3 years ago. I wear the same one. I stink, every day. I never wash. I wear the same shirt every single day. I've actually got 10 identical black shirts, and I just every day change my shirt, and that's it. I don't buy a new one, and I just sit here and talk to you. There you go. I really only started with $5,000. It's not about how much money you got. It isn't about that. It's about working hard, staying in the game, and just doing and following the same thing. I remember when who was it who told me? Who was that person? Drillian. Oh yeah, he wasn't a very nice person. Drillian. He used to come in, and he used to say, "You can't make money owning Coca-Cola. You can't make money owning the S&P." Well, Warren Buffett did all right, It's all about patience and time and just staying the course. But no one's got any patience. Everybody goes, I want to be rich in 5 minutes. Well, good luck with that. Most people will lose, but don't worry. IP address is based on location and device used, so it doesn't prove anything. MSK. I'm not going to comment to these comments. Sean Michaels, excellent analogy. Hugo, Christian, thank you very much, I think. I'm not sure what I'm replying to. Anyway, Hugo. I have taken profit because what's going up must go back down. Fight Channel. That's good. Nothing wrong with taking profits. I could have taken profits, but I choose not to because I don't need the money and I want to own the businesses. Remember, you've only got about 2 weeks to go, less than that, to be in the S&P to receive the dividends. So I don't want to lose the dividends for all my 270 shares of the S&P. I don't want to do that. And second of all, I don't want to pay any tax either. I don't want to pay any tax. Zero tax. Let's not pay tax. Let's post losses. Let's not post profits. So let's not do that. Anyway, let's have a look. I'm not going to get into all the arguments going on. Hey, Mike. Hey, Bitcoin. How you doing? Malk UK. How are you, mate? Let's have a little look. Martin, wouldn't one have to be a broker, market maker to own the casino? No. No. I own the casino. What do I mean by that? I own my own business. I'm in charge of me, and I earn money, and I don't waste any money. So I am the casino, right? I make money from me. Then I buy the market, but I don't trade it. I don't gamble. I just own it. And I hope in time to own millions of shares of the S&P. So I will own the market and I won't trade it. So I own the casino. If you walk into a casino, you are gambling, you are trading, you are in and you're out, you're a customer, or you own the casino. I own the casino because I own the businesses. I own the businesses that you're trading, you're playing with them. I don't. I own them. I own them and they work for me 24 hours a day, 7 days a week. You are the best. Thank you. Geo Crypto, thank you so much indeed. Nice bluff, Mr. B Canal. Not sure what that means. How long will it take to make 3,000? How long will it take to make 3,000 from 500? I've no idea. It depends what you buy. It depends on your discipline, doesn't it? I don't know the answer to that question. Depends what you're doing. Martin, quick question. Your wife still hold? Yes, of course, but I'm not going to discuss that on the show. My wife's portfolio is her business. It's not part of the show. It's not part of entertainment. My wife holds her positions, and it has nothing to do with me, nothing to do with my portfolio here. My wife's financial situation is nothing to do with this show or me or whatever. All right? Anyway, what's in your portfolio, Sean? Just the S&P, 100%. Look, if I scroll up and I share with you, I've got nothing in Ethereum, nothing in Doge, nothing in Bitcoin. On Robinhood, it shows in there because I used to have something, and you can't sell it all. I try to sell it all, but I can't. It's just stuck there. But anyway, that's whatever. If you look here, 100% of my main account, 99.9%. Because when I win free stocks, free shares, I just buy Apple because you can't buy the S&P. All right? So 100% of my money is in the S&P. And if you go to my Roth IRA, same thing. 100%. 100% is in the S&P. So you know that I'm not pumping, dumping the stocks at all. I can't pump and dump what I don't own, can I? It's not in my nature, not interested in doing that anyway. Right, so there you go. Shawn Michaels, Martin just holds the S&P, that's right. Let's have a little look. What stock made you the most money from 5 grand to 93? What stock? The S&P 500. The most important investment is me. The most important investment is me. My discipline to stay in the market. Watch it every day. See when we get these macro conditions and everyone dumps, and just buy more. I'm just waiting for those moments all the time, just to own more. All investing is a transfer of wealth. When traders decide to dump the stocks, I go, thanks ever so much. Thanks a lot. Now, there's 2 ways of doing it. Fight Channel has been very successful, but Fight Channel has just taken his profit. He sold some positions. He's now got to pay tax on that unless he did it on his IRA. But now what he's got to do is look for the next position to get back in. But what if it keeps going up? Is he going to buy it when it goes down 1%, 2%, 10%, 20%? At what point does he buy back in? I don't worry about that. I don't worry about that. It's not important. It's not important to me. I know what I want to achieve. I want to make $1 million in 6 years and 100 grand within 2 months. That's all at 3 months. That's all I want to do. That's my goal. And to get to that goal, I've got to follow this path. I don't have an alternative goal. It's not I want to be the richest man in the world or whatever. To put, let's have a look. Hit the like, says Jay Long. 3-minute blitz. I'm not sure what that means. Great show today, Martyn. Thank you. I have to step out shortly. I'll see you in the morning. Tomorrow is members only. Tomorrow is members only. It's going to be casual day. I'm not going to be in suit and tie tomorrow. It's casual. It's members only day. First time we've ever done it. A members day like this. So let me show you here. If you look on the homepage of the channel, scroll down and you will see upcoming live streams, members only, free reviews. It's a members day. Everyone can see this, but only members can click on it. It's tomorrow live. The opening bell tomorrow live is a members only event. Members only views, members only chat. I'm going to earn less money doing it. It doesn't matter. I'm here for the members. The members of what have provided this channel and built this channel with me. So I want to give back to you tomorrow and have a casual day, no suit, no tie, and do members only reviews and do free reviews on fundamentals for you. If you want to become a member tomorrow, here is the link. There you go. Bye-bye, John. Bye-bye, John. Bye, Jay. So you mean the influx of the YouTube business was the best way to boost your wealth? Not really. I made more money just buying the S&P than I've earned on YouTube. Yeah, I mean, that is the fundamental thing anyway. If you're using the stock market as your income, if you're trying to make money so quickly that you don't need to do anything, you don't need to earn any money, you're doing it wrong. You're doing it wrong. The key to wealth is income. You take your income, whatever it is you earn, whether you're a millionaire or you work at McDonald's, whatever you earn, you take your income, you spend less than you earn, and you invest everything. That's it. Very simple. If you're coming into the market because you don't earn much money and you want for the markets to make you rich without you doing any work, that never ends well. That never ends well. MSK is an example of that. MSK has done very well on the stock market, but he has a good business. He earns good money. He has a business. You don't just turn nothing into something. You have to earn money and you have to build, you have to work. And it doesn't matter if you earn $1 an hour or $1 million an hour. It's the same percentage. I'm just being more honest, right? Meet Kevin has built his portfolio from YouTube, but he just doesn't admit it, right? He flies a plane because he earns millions on YouTube. It's not because of his trades and his investments. It's because of what he's earned. And rich people, and I've got lots of millionaire and billionaire friends that I have spoken to and met, and there's one thing they all have in common: income. And it doesn't matter how much money you earn, you just don't spend more than you earn. And rich people never waste money. They don't waste money. Poor people waste money all the time. How many times you walk around the mall, I don't know how you pronounce it in America, and you'll see people that are unemployed or on low income, and they're walking around in Reebok trainers, Nike t-shirts, the latest iPhone, hanging around Starbucks. right? Whereas the rich people, they're at home working, wearing the same clothes every day. I mean, that's the thing. I mean, you've got to just decide, are you a worker or an investor, or are you a spender? I want to own the businesses that people spend their money in. I don't want to be in the shops buying anything. I want to be investing my money. Money isn't for spending, it's for working. Once your money has made money and you've built up a portfolio, now you can spend free money. Because it's money that's become for free. So like I did, I left home at 16. I built a business. I worked. I paid my house off. Got myself solar panels so the house runs for free. Got myself to be efficient. Then I started rebuilding. Then I had to rebuild my business because of COVID. It changed everything for me. Rebuild the business. I built this business. Now this business is growing. I start investing, and it's simple. And I just keep doing the same thing over and over again. Anyway, recency bias, very dangerous. What does that mean? Started with 5 grand, lost 30 grand on Virgin Orbit. Correct. I lost 30, and in fact, that's not quite true. I lost $30,000 on Virgin Galactic and about $3,000 on Virgin Orbit. So Grippy started with $5,000, lost 30 grand on Virgin Galactic and about 4 grand on Virgin, 3 or 4 on Virgin Orbit. Made 93,000 S&P in 1 year. It sounds legit. Grippy. Why are you saying that? That's not what I said at all. Let's break down what you just said there, Grippy. Started with 5 grand, correct. Lost 30 grand, correct, but Virgin Galactic, not on Virgin Orbit. Made 93,000 on the S&P. No, I've only been in the S&P for 6 months. Let's get that absolutely straight. I've only been in the S&P for 6 months, not since the beginning. So let's get that straight. On the S&P in 1 year. Sounds legit. I've been in the market for 3 years. So there's nothing, there's nothing hidden here. Everybody sees me trade every day. They see my real money. They see me live every day. I even tell them every single month on the 21st of the month what I get paid. They see my portfolio go up. Do you? Do you tell everybody how much money you've really got? Do you tell everybody how much you really earn? I do. I share with everyone. So you can say it's legit or not. That's up to you. The reality is everyone has watched my portfolio grow live on the show, right in front of you, 12 hours a day. They know what day I get paid. They know how much I get paid. I don't have to share that information. Meet Kevin doesn't tell you. Graham Stepan doesn't tell you. Omar doesn't certainly tell you. And flipping, what's his name? Roaring Kitty definitely doesn't tell you. I tell you everything. I share with you everything. That's the nature of the show. It's a real life journey. No taxes. It's in the IRA. Congratulations, Fight Channel. Absolutely right thing to do. Congratulations. Grippy, Martyn owns shares of VU, an ETF compiled of the S&P, so not individual stocks except for Apple, I think. SPY is the other ETF fund. Yes, there are about 5 different ways of buying the S&P. There's more than that. The 2 main ways, Becky, is VU and SPY. SPY is used for professional traders who trade in Wall Street millions of times a day. That doesn't mean to say you can't do it. Everyone can buy SPY. I buy VU because VU was designed for retail investors. It's slightly cheaper. Its cost basis is slightly cheaper. Hardly any difference whatsoever, unless you're trading millions of times a day and you have hundreds of millions of dollars, you'll never notice the difference. It's exactly the same. Now, if someone says to me, yes, but they are a different price, they are a different price because their inception date was different. They started at different times, but their growth is exactly the same. If you put SPY over VU, it's identical, but VU will cost you slightly less. The management of the account is slightly less. So it's best to buy VU, but it's no difference at all. If you want to play at being Wall Street and you want to buy SPY, it makes no difference whatsoever. And if you're trading thousands of times a day, it might feel a bit different. The bell has gone on the end of a great day. Fantastic. So there you go. How do you compare S&P with the QQQ? They're very different, but it's not really about the... I prefer the S&P, but it's not really about which one is best. It's about just staying in. People too often, I think, try to compare, if I did this, I could make more money than this. 9 times out of 10, the biggest losses and the differences will come by you trading at the wrong time. So you don't have to worry about that if you just stay in. And at the end of the day, who cares if in 6 years' time I have $1 million or 1,010,000? It doesn't matter, does it? It doesn't matter, because at the end of the day, in 6 years, I'll have $1 million. In 3 months, I'll have 100,000. Could I have 100? Could I have 105,000? Probably. Doesn't matter though, does it? It doesn't matter. Doesn't matter what everybody else has got. It only matters what you've got. It doesn't matter what your losses are. It only matters what your gains are. Don't worry about the alternatives. Just care about what you have got. Don't worry about the next door neighbor who's got a better car than you. Just care about the car that you've got. Sean, the QQQ is mostly tech stocks. It's like the Nasdaq, you know, heavily weighted. But again, over the longest history, the S&P has been proven to be a good asset. It's not heavily weighted in one direction or not. You're basically buying the American economy. That's what you're buying. And right now, for example, J&J, Coca-Cola, is being sold off because of high growth. They're on discount right now. Oh, hang on a minute. Here we go. I've just had this come into my account. I already knew about this, but I'm going to share with you anyway. Look at this. Hooray! From Robinhood. Boost. Boost. Unlimited deposit boost. As much money as you want to put in Robinhood, they're going to give you a 1% on every eligible deposit. Absolutely fantastic. And then it can earn 5% on your uninvested cash as well. Absolutely awesome. Absolutely awesome. Let me delete that a minute. Not right now. There you go. Absolutely fantastic. Now, we need to end the show because we've got to get ready for a special event tomorrow. Not right now. I've already done it. Right. So before I go, I want to mention this again. Today has been an incredible day. Tomorrow is going to be even better for members only tomorrow. As you've just seen there, Robinhood now is just crushing it, right? They are, and I'm not sponsored by Robinhood. I'm not paid by Robinhood, in case you think that, right? There's some things I want to give you right now, which you just cannot afford to leave. It's free, okay? So first of all, if you are in the United States, and don't turn off if you're in the UK, I can help you as well. If you are in the United States, I think I might have enough, but one person dropped out earlier, so I'm not really sure. I'm trying to get a solid gold credit card worth $2,000, which I'll just take the cash or melt down. And if I do, anyone who helps me get one, I'm going to share as cash prizes. I'm going to share some of the spoils of that with you. Okay, so here is my link to get Robinhood Gold. Now, if you get Robinhood Gold, right, it's flipping phenomenal. I absolutely love Robinhood Gold. The perks and benefits are ridiculous. Okay, absolutely ridiculous. You get 3% match, 3% cash back your credit card that's coming out, 1%, 3% match on your Roth IRA, 5%, 5.25% interest on uninvested cash. And as of today, 1% match on all money that you put in. So it's you basically got a 1% pay rise from your job today. Even if you have margin, even if you don't buy stocks. Now, some people will try and ruin it and go, oh, well, they pay you over 2 years. Doesn't matter. What does that matter? If they said we're going to give you 1% match, you'd have all the clowns on YouTube going, hey, guys, I've got a great idea. Put money into Robinhood, get 1% back, and then draw it out. So Robinhood would go bankrupt. That wouldn't work, would it? So what they're saying is you put money into Robinhood, you haven't got to buy stocks, just leave it in cash. You earn 5.25% anyway, and then they'll give you 1% match, and they'll just pay it out over 2 years. So you'll get the money just paid out every month. And all you got to do is leave it in your account. You can buy stocks with it or whatever. You can trade the stocks. You just can't withdraw that amount of money. Makes sense, right? Makes sense. Obviously. No brainer, right? So that's what you got to do. So if you click on my referral here on this gold card and you get Robinhood, right? You can get all these, and you go gold, which is only $5 a month. It's worth it. Totally worth it if you invest. If you just have $50 in your account and don't do anything, it's not worth it. But I may only need one person now. One person dropped out today. I'm not sure. And if you do click on it, send me a picture into Discord, and if I get my Robinhood Gold card, I will, look, Rallo1, Zed Hink, they did it today. They did it. I can see who helped me, and I'm going to give cash prizes to the people that helped me. So not only are you going to get all the perks and benefits, not only are you going to make money, not only can you share a referral to get a solid gold credit card, I'm going to give prizes away as well. So it's a win-win-win-win-win every which way you go. Right? Absolutely brilliant. Now then, what if you're not interested in the gold card, but you do want some free shares? Because with that link, you get both. If you don't want Robinhood Gold, but you do want just some free shares, click on this link if you are in the USA, and click on this link if you are in the UK, because I have a Robinhood UK account as well. So there you go. All right? Free shares for everybody. I will share with you what I get, and everyone's a winner. Absolutely brilliant, right? I think you'd agree. What better do you, what do you want? What do you want? Right. What we're going to do now is I am going to send everyone now to the extra channel. Behind the scenes, we're live 12 hours a day. Sorry about the few technical breaks today in service. Unfortunately, that was just the way it was. But anyway, we're all good. Sean, look up what comprises the S&P. Then look up the comprises the Nasdaq. SPY is the ETF, SP, QQQ for the Nasdaq. Okay, be careful buying at the top of the market. The hillbilly Kane right at, but also Becky's right. Don't buy at the top of the market. However, don't wait for a pullback. Just saying. Don't think, well, I'm going to wait for a pullback. I think it's never the wrong time to start in the S&P. Will it fall back from an all-time high? Probably. Does it matter? No, because in 6 months now, you'll be up anyway. There's new all-time highs are constantly reset, constantly achieved in the S&P. So if you're buying the S&P today, you own the best 500 companies in the world, and tomorrow it goes down 5%, just buy a bit more. Lower the average. That's all. Doesn't really matter. It's going to be up in 6 months. It doesn't matter. The hillbilly came right out of the hillbilly came right out of you, Martin, when you said mall. I don't know. It's an English phrase. I don't know. Kid, much love. I don't know. I'm with Martin. If you want to have money when you retire, then save, invest. Don't spend and keep it up and keep up with the Joneses. Keep up with the others is a money pit. Absolutely. Sod it. I don't need a car. I just walk at the moment. I don't need stuff. Don't want stuff. Don't send me stuff. Don't want stuff. I think it makes more sense after counting in you added cash. I think it makes more sense after counting in you added cash. Well, of course I added cash. Of course I did. Every time I get paid on YouTube, I add money. Don't you? See, it always makes me laugh when people kind of criticize me when they say, yeah, but you're adding money. Well, don't you? When you get paid, do you add money? Well, yeah. Well, am I not allowed to? Am I not allowed? Someone said to me the other day, I forget who it was. Someone said, if it's not about the money, why don't you do all this for free? What? I just do it for free. I tell you what, I'll give you any money I earn. I'll just give it to you. I'll just donate it to you. How about that? And then you can give me what you earn and we'll be quits. It's not just that $5,000, 18 ed, you had added and performed better later on after improving strategy, right? It's not just that $5,000. Well, of course it's not. I never said it was. I started with $5,000. For the first year and a half, I earned $0. For the next year, I earned $1 a day. And now I earn a bit more. And now I put in all I earn. Yeah, I didn't say I only ever put $5,000 in and I earn $0. And I literally sit here and don't eat and don't sleep, did I? I think it's quite apparent that I must earn some money, as everyone earns money. Every single person here today who says their portfolio has gone up has probably earned some money and put some money in. They didn't just sit and look at it. I mean, that ain't going to work, is it? You know? I mean, when you watch Meet Kevin and he says he's got his own ETF, how do you think he did that? It just grew from itself? No, he earned money on YouTube and he bought it. I mean, what do you want? Anyway, Wrap is going to get delisted. I think they are going to dilute the stock. Dear, oh dear, that's not good. And all you in here, you can just buy 5 or 10 or even just 1 share at a time. You don't have to buy 100 shares at a time, known as a lot. Correct. Becky is talking about options and contracts. I never even do options. I don't even do contracts. I don't like them. Just own the business. Just buy a share. If you can't afford a share, use Robinhood and fractional share. You can buy $10 of the S&P. You don't have to buy a whole share of Tesla or Apple or Nvidia. You can buy $1 of Nvidia and then you own a piece of the business. Because of this show, I had my 401k switched all to the S&P because Schwab likes to divide it. And I have made $4,000 in 1 month. Thank you, Martin. Would have never known before this show. There you go. Look at that. Rallo won. Because of the show, I have made, I switched all my, I had my 401k switched to the S&P because Schwab likes to divide it. And I made $4,000 in 1 month. Thank you, Martin. Would have never done this before the show. Do you mean you transferred it to the IRA on Robinhood because they give you a 3% match? You said you transferred it to the S&P. Did you then transfer it to Robinhood? Because you can still do that and get a 3% match on the Roth, or you can transfer it to your brokerage account and get an extra 1% now, because whatever money you bring in, they're giving you 1% in addition. So that's really great. You've made all that money, but you might be able to make a bit more. Anyway, N Bell. Hi, Martin. What do you think about SPY? SPY, VOO, it's all the same thing. It's more expensive than VOO. Just buy VOO. VOO was designed for retail investors. SPY was designed for Wall Street. It's exactly the same. Different prices because of different inception dates. But SPY, because of its volume, is a slightly more expensive cost basis than VOO. VOO is the best buy if you are a retail investor, and unless you are a billionaire, VOO is better for you. Howdy, Martin. Hope you as well on your end. How do you come up with your margin of safety? I hope all is well on your end. How do you come up with your margin of safety? Are you talking about margin? Well, I can answer that. That's very easy, if that's what you mean. So all my money is invested. I've got no cash. It's all in. If I look at my buying power, you will see I've used $28,000 of margin to buy the S&P. So I've got a 64% buffer. That's flipping huge. Now, 28 grand sounds a lot, and it is a lot, but it's in proportion to the size of my portfolio, right? When I get 100,000, I'll have 35 grand in margin. When I get $1 million, I'll have 200 grand in margin. I'll just keep going up, right? It's cheaper for me to borrow money and use it than it is to just don't, right? Especially when rates come down, margin will get cheaper and cheaper, and the S&P will go up and up. So how do I do it? Well, I could spend another 112,000. No, I can't, sorry. I've got 84,000 left. I've got 84,000. Hang on, margin to 112, yeah. About 80 grand left in margin. I've got another 80 grand. If I did that, I could do that, but it would take me, at the amount that I earn on YouTube, about 10 years to pay it off. Now, I don't want to do that. I don't want to be paying 5.25%, 6.25% for the next 20 years. I mean, as I earn more money, and there's no real risk, but I need margin available to allow a big buffer, so I've got no stress, allow for a big drop in macro conditions in case there's some big scare. Suddenly someone decides to drop bombs on somebody and go World War III starting, I don't know, whatever. I need to be able to react to that. And I'm not greedy. There's no point. I'm going to achieve my goals anyway. Of course I could spend another 80,000 on margin and buy even more of the S&P, and I'd make even more. But I want to be able to pay it off in a few months. And now it's going up. I'm just working to pay off the margin. And then if it keeps going up, I'll just build up my cash, waiting for a dip, and then just do it again. That's it. But that way I've got room to buy more. And I just keep a good percentage. Don't go over the top. Don't spend 100% of margin. I can, but I'm going to achieve my goals without the drama and the stress. So let's just do that. Green light is a great way to long-term invest for your kids in the stock market. Green light. Never heard of that one. Why isn't Robinhood available for Canadians? I don't know. Are you covering Tesla? Yes. What do you want to know? Antonio de la Cruz. What do you want to know about Tesla? Tomorrow is Members Day. You can have whatever you like. Tesla's doing all right, but it's only going back to where it was. It's too expensive. It just can't go up from here. It's only worth $110. Elon Musk will tell you, but no one ever listens. Tomorrow, I'll cover whatever you want. Any news on space stock split? I haven't seen anything. I've got no news about that yet. If you do it, Martin, if you do it Martin's way and you don't have to have a lot to invest, then buy one share or two at a time. There you go. Dollar cost averaging, says Becky. It was my reaction to the other comment as well. I didn't critique you adding cash. Okay, that's fine. I just have to make sure. Sometimes I comment and it might come across a little bit combative. I don't mean it to be so I'm sorry about that. The reason why I comment to everybody is a lot of people will come in and out of the show in a few seconds. They'll just drift past. And I try to make sure that everyone has had every question answered. So sometimes it comes out of context, and sometimes we misunderstand each other. But if I'm wrong, I say I'm wrong, I apologize, whatever. But it's important for me to engage with everyone. That's what the live shows are all about. Shouldn't money grow from money? How else to measure if if the investment is growing because of because of stock or because of adding money. Shouldn't money grow from money? Well, of course it should. Of course, money should grow from money. Let's have a look at the last 3 months. What about 1 year? There you go. 1 year, 13%, 7,803. What about the IRA? What about that? Of course, money makes money, but you can't make money without doing anything. You know, the stock market isn't supposed to be a casino. It's not supposed to be, I've got no money and I'll just buy any old rubbish and it doesn't matter. Life's going to be fine. I mean, it doesn't work like that, does it? Anyway, that's what I thought too. Just thought there was some confusion. Cool. And I'm glad we clarified it. GWAV is a dumpster fire. High hopes to make some money, but this Trevor Milton, Nicola type scammy. Sorry about your experience there. No, Martin, I just mean 1 share of Tesla, 1 share of SPY, or 1 share of any stock. Okay. I don't even know how to do options and don't want to do them. No. Options is an extra gamble. If you, let me explain. If you buy stocks, that's here at risk. If you do options, that's here at risk. If you do margin, that's here at risk. If you buy options with margin, that's up here. All right? So there you go. That's how I measure that. I had to keep it with Schwab because my company matches, so I had to leave it in Schwab. I just think Bitcoin, love it. Jack, what's going on here? Do you think that little gap to, I'm not sure what that is. What happened when you got margin called? Just what happened when I got margin called? I did get margin called live on the show. I didn't actually get margin called though. Let me absolutely explain. Last year, 2 years ago, when I started, I made a lot of mistakes. I was losing money all over the place, right? And it got very emotional and I was in tears on the show. People were watching me cry and it was like, oh my God, it was horrible, right? But I didn't get fully margin called because when people get margin called, they're not watching their account. They get a surprise. All of a sudden they get an email from Robinhood going, we're selling all your stocks. You owe us money. It's all terrible. That happens if you don't pay attention. Well, obviously, I'm looking at my stocks 12 hours a day live. So that never happens to me. What happened was the stock went down. It hit the margin maintenance line. I added a bit of money. I sold a few things. It's in and out of margin all the time. So nothing bad happened. I got margin called, but I didn't get margin called because as it was happening, I was dealing with it. And when you get margin, when you hit the margin maintenance line, it's not a bad thing. You just got to do something about it. And I did something about it, took care of it. It wasn't a problem. It wasn't very nice seeing my money go down and down, but I dealt with it. It was fine. And I learned and I grew. And what I've done, I've made a special margin video, Bitcoin. I would strongly recommend you watch it. It explains it all. This is a really popular video. Look, let me share with you. If you go to YouTube, you type Martyn Lucas Investor and you go margin. I made a special margin video. Margin call 4 months ago. Avoid disaster with a margin call. There's one video. Has been requested to be made by one of our members. I will make videos on your request if you're one of my members. One of the perks. What is margin? Well, let me explain what it is and show you how I have used it. Should you use it? Is it a good idea? Right, here's one of my videos. Share, copy link. Here's a margin video. Margin. Here's one of them. Margin. Go and watch that one. You can do this yourself. You can type it in Martyn Lucas Investor Margin. I did another one. Omar, surprise, no surprise. Margin. Was that the one I did recently? Margin call. Let me type that in. Yeah, I think it may be that one. Was it really that long ago? 4 months ago? I thought it was recent. Oh, there's another one. Margin call. Oh, yeah, look. Look at that one. Margin called on Victory Day. Painful day on the stock market. Oh, what happened here? On the Day Trader. Breaking news here on the Day Trader. As you can see, I am just literally a couple of $100 from being margin called. This has been playing out every day on my live show. Every day I'm here on the Day Trader trading live. This is my position. The markets are just selling off. It doesn't matter where you are right now. The markets are selling off. I've sold some Johnson & Johnson today, which was... There you go. Copy. You might like that one. There's another one. This was my... hang on. Losing it all. There's another one. I believe every drop of rain that... There's another one. I was losing it all. What is it? Tears. Margin, was it tears? Tears. I was in tears. Loads of videos. I've made over 5,000 videos now. Martyn Lou, was it Cry? Was it Cry? What was it? What would it be called? Cry. No. Can't find the one where I was crying. Bloody hell. It was a right old state. Oh, hello. What's going on there? Yeah. Okay, that's a couple for you anyway. Now, Malik Acid has just become a member. Thank you ever so much indeed for becoming a member of the channel. Tomorrow is Members Day, so we've got free reviews, we've got all sorts tomorrow, so good time to become a member. Here is the how and why and all the perks that you get as a member. There are many, many things that you get as a member. I can't tell you what they are because it'll take me half an hour, but watch this video. I'll give you the link for you now. And Malik Acid, there are many, many things that you get, including free training from scalp trading expert Ed Nevis on Discord and so on and so forth, all right? Here are some of the links. There's Alpha Spread. You can now get a lifetime discount to that. If you engage with me on Instagram and Facebook, I will engage with you. There's my X account. There's the all links. We have cash giveaways. There's Discord, but you need to be upgraded, and I'll do it on the show once you've watched the video and you know what to do. Right, I've got to get out of here. No information on that yet. So it's a repo of your stock. Does it? No. I have got a perfect credit score. I have got a perfect credit score in Europe. I've got a perfect credit score in the UK, and I've got a perfect credit score in the United States. In the UK, Experian, I have 999, which is the highest you can get, same as in Europe. And in the US, I have a credit score of 826. 826. And considering I only have 6 years of history, because I've only been here 6-7 years, that's pretty good, and that's perfect. You can't get higher. The only way I can get 850, which is the max you can get, would be to live here for 20 years, because I haven't got the history. But 826 is excellent. It's as high as you can go, really. 850 is the highest you can go. So It's not about how much money you've got. It's about how to manage your money. Thank you, David. Everyone should watch that video, I think, the margin video. I love Ed. Ed is great. Right, folks, I've got to go. I'm way over time. Way over time. This is what we're going to do. Stocks going back up again. We're all-time highs. We hit 93,000. We'll be at 100,000 in about 3 months. No question about it. Rates are coming down in the summer, like I've said. Right, tomorrow is a members-only day, members-only live stream. You won't, and I don't mean members-only chat. You won't be able to see it unless you are a member. It's the very first time we have done an opening bell that is members only. The general public won't see it. It's so I can give back. Relax, no shirt and tie tomorrow, and do reviews for people, members only, and that's what it's all about tomorrow. All right, I'm done. I'm out of here. Thank you very much indeed. I hope you all tap the like button. I hope you all subscribe to the channel. If not, that's okay. Oops, Daisy, that's no bloody good. Get rid of that. There you go. If you've done that, that's absolutely brilliant. If not, don't worry about it. Anyone need upgrading on Discord? Nope. Right, we're going to send you now to the extra channel. And don't forget our new member, you can get a free song on Friday night in the concert. We're going to go over here now and have a chat. Space it. Oh, space is down. Oh dear, there it goes. There it goes. There it goes. We said it was going to happen. Oh dear. That's exactly what we said. We gave you a 17% trade on it yesterday. You should have got out. There it goes. Virgin Galactic down to 50 cents. There it goes. Look at that. It's falling off a bloody cliff. So at the end of the show, let's here we go. Have you got confirmation of that? What's going on? Space. Here we go. Breaking news here on Martyn Lucas Investor on a record-breaking day. It's why I'm wearing gold. I hit $93,000 today. We've got a great economy now. We've got rates coming down in the summer. In July or August, they'll be coming down 100%. I've been saying it for 18 months. But we gave you the trade yesterday, a 17% trade, told everyone to take the trade. It was a 78 to 98 cents trade at 17%. We pleaded with you, get out, and we said it's going down to 50 cents now on the reverse split, and there it goes. 25%, 27%, 27.5%. Look at it go. It can go all the way down now to 50 cents. 27. Oh my God, this is absolutely terrible for Virgin Galactic. This is what we said. You can buy it now for 50 cents. It's not that far away. And this has come on a day when we know rates are coming down in the summer. We've only got another 2 months to go and rates have come down, but we saw what happened with Virgin Orbit. Stocks like GameStop will go to zero. FFIE will go to zero. They're all finished. They're all done. They're going nowhere. Virgin Galactic now is hugely undervalued. This is a huge opportunity to get Virgin Galactic, but just remember, it doesn't look good when a stock goes this low. Reverse split, 95% of statistics I have looked at, reverse splits never end well. This is a really bad day for Virgin Galactic, but it's not a surprise. The opportunity that was there to trade this morning, 50 cents is now on the cards. It is an overreaction. It is an overreaction because the stock is massively oversold now. That's what we said. This could be an opportunity. It's already bouncing back. Look at that. This could be a great opportunity. But if you do get a 25-30% trade, take it. It's now dragged into the meme craze. A lot of meme stocks are going to zero. FFIE, GameStop, all of these stocks are going down the toilet. Great businesses now are getting the money. All good businesses are making money right now. So if you are making money, remember it's after hours now. Stop trading. Trailing losses do not work. After hours, they do not work. All All you've got is doing your manual stop limits. Be very, very careful though. This stock can go all the way down to 50 cents before this is over. There you go. We've got somebody in the chat talking nonsense. Virgin scam. What do you mean it's a scam? There's nothing a scam about it. It's an extremely badly run business. The product is great, but the company are rubbish. The management is rubbish. So there we go, 73 cents now. The trade was there. Let's watch this for a few moments. This is happening live. We are green. We're wearing the gold jacket today because we hit all-time highs today. 92,000. We were at 93,000. The markets are booming today. Interest rates coming down. Inflation is cooling. The United States is behind because of the lagging effect. They're going to catch up with Europe and India and the Canada and UK shortly. Rates coming down in the summer, July and August. Watch it. You'll see it come down. I've been saying for 18 months. But right now, Virgin Galactic is a huge, huge gamble right now. It's undervalued. It's a good time to buy it if you believe in the company. But remember, you don't buy a product. You buy a business. The business is Michael Colglazier, Eric Kearney. That's the business. Do you believe in them? I don't. I believe in the product. I don't believe in management. They should be fired, replaced, and then we would see things improve. Right now, though, we've got a stock price more than likely to hit 50 cents. So be careful if you're buying it here. It could go down another 20-30% from here. Be very careful. So there we go, Virgin Galactic. I'm not going to stay on this for long. We're just covering this live, watching it live, seeing what happens after hours. Is it going to give you a quick bounce back? Remember, if you do buy it and you do trade it, do it on your IRA. Otherwise, you'll pay massive capital gain tax. Here it goes, coming back up again. A lot of volatility with this. It's moving. Do it on your IRA. You won't pay any tax. There you go. It's oversold on the RSI, but don't think it can stay down there. It can go back up again. It can stay down there. If we look at the buy orders, don't use this. It's manipulated. You look at that and go, oh, it's going to go up. Level 2 data is really no good. It's comic book stuff. It's used for retail investors to give you the impression of things moving in the right direction. It doesn't do any good. Level 2, you need level 3 or level 4. Level 2 is useless. Don't trade on that. It's not good enough. If you're using that and thinking you can win, be very, very careful. Let's read the comments. There are people who invested 150 grand with this stock. Which stock are you talking about? June the 14th, 1 for 20. Radiant Smart, I'm keeping my space. Becky, 1 for 20 split effective June the 14th. There it is. Breaking news. Mark Saxby. Then it will be shorted. To $1 again. Yes, bloody hell, Christian Catering. You should be very, very angry tonight because Virgin Galactic decided to do a reverse split before it was necessary. All they needed to do was start to market the company correctly. I offered my services. They declined. They're more interested in shorting stocks at GameStop, as Eric Kearney confirmed to me. They're not interested. The company is being run badly. The fact they announced the desire to reverse split before they needed to shows you the weakness of this company. Very, very weak management. So much risk. Jay Long is in tears watching this happen. I'll claim it as a loss on taxes, says Radiant Smile. 150 grand, 1 second, gone. Look at that. Space, worst investment I have ever made. Mark Saxby. Broadcom, Avgo, 10-to-1 stock split coming as well. Down $164,000 on Space, says Mark Saxby. Can't wait to hear your insight on KBC. Sebastian, tomorrow. Michael C. is rubbish. Michael Cole Glazier is rubbish. Yes, he comes from Disney where there's more money than sense, and he's wasted it. He's paid himself too much money. They voted on pay rises. They've used your vote to get them to pay them pay rises on performance. Really? Performance? What performance? Mark, I am so sorry. This is terrible, terrible day, but we knew it was coming. There's no surprise. We were 100% aware of this. So there we go. Virgin Galactic, how low can it go? 50 cents would be my estimate. That's where we predict it, looking at all the information, looking at the way people are trading this. 50 cents. Now, most companies don't come back from this. Virgin Orbit went bankrupt. What is the market cap of this business now? Let's have a quick refresh at the market cap now. You can buy the whole of Virgin Galactic now for $350 million. A space company, a rocket company. Dear, oh dear, oh dear. $350 million. Wow. And if we're not careful, by the morning, that could be under 200 million. Bloody hell. I don't even know if that number's updated yet correctly. Wow. We could work it out, but we haven't got time. You warned us over and over again. Yes, I did. I warned everyone over and over again. We gave you the trade, told you to trade from 78 to 98, take 17% profit. We said it to get out. It was going to 50 cents. The management are rubbish, and here we are facing down the barrel of a stock going all the way down to 50 cents. If it does, it'd be worth under 200 million. And then, of course, if it does go to 50 cents, people will start getting even more aggressive on the short position, trying to drive it down to 10 cents. And then we'll have a company worth under $1 million. What can I say? Becky, you warned of us over and over again. What is the short interest? It won't reflect until the morning. I'll look at it in the morning. Anyway, there we go. Sad evening. Right, I must go. This is being made during a live video. Click above my head. Tomorrow is members only day. I'm so sorry for everybody. This is awful. But it was the writing was on the wall in solid, luminous green. Look below in the description of the video, over here and over here. Until we meet again, members only tomorrow. There'll be no opening bell for the general public. We're giving away special gifts tomorrow, cash giveaways, and free reviews tomorrow. Be very, very careful now if you are buying Virgin Galactic. Remember, you cannot do stock trail losses after hours. Tomorrow could be an absolute bloodbath for Virgin Galactic. Be careful. If it hits 50, it could then drop to 10 in a second. The negativity on this stock now is unparalleled. The management should and must be fired. Above my head, down here, over here and over here. What a sad story. Until tomorrow, take care of yourselves and each other. Hi guys, how you doing? I'm back in the studio with you, and just wanted to see if anyone needs any support or conversation with what's happened tonight with Virgin Galactic. Our dear friend Zach Zate, want to obviously support Zach as we can. Obviously, I see he's okay and he's happy, which is the most important thing, and just want to make sure that everyone's together on this. It's a very difficult time, obviously. For all concerned. It's no surprise though, reverse split this is bound to happen. The stock price will go down and then hopefully rebound. It is an overreaction, of course. It's what happens with a reverse split, but it's never good. It's never nice to see if you are in the stock, of course. But anyway, I'm just in the process of getting ready for tomorrow. Wanted to pop in and see if everybody was okay. So there we go. I'll just keep coming back to you for a second. I'm just doing the FOMC video and getting ready for tomorrow as well, because tomorrow is Members Day tomorrow. So I'm just setting up for that now. Tomorrow, 7:30. Let's get ready for that. Free reviews, members only. It's Members Day tomorrow. So let's set that up in just a few minutes, I'll start uploading the FOMC report as well. Members Day tomorrow. Right. We're all good. I'll come back to you in a second. I'll keep looking in on the extra channel if anybody's in need of a conversation. Let me have a look. No, everyone seems to be okay. All right, so I will leave you for a bit and I'll just put some music on. I'll be back with you in a few minutes.